Hello dear students, today we will see the second problem with adjustments final accounts. Previous problem, don't miss it, this is second problem. First of all, what we need to do, see the trial balance, then after that we will go for the adjustments. See the trial balance, it is given like this, each and every item I will explain it, capital, balance sheet liability, plant and machinery, balance sheet asset, sales, trading account credit side, purchases, trading account debit side, returns, here please be careful, debit side returns are there, credit side returns are there, purchases, debit side. So this credit side which is given is purchase returns. Please make it clear, this is purchase returns and this is sales returns, because sales are credit side, sales returns will be debit side. Simply they have given returns. So what is debit, what is credit, you must know, then only you can identify. There first in the trading account only you are going to make mistake if you cannot identify this. Purchases debit, purchase returns credit, sales credit, sales returns debit. So returns means sales returns, purchase returns. Opening stock, trading account debit side, and discount also two it is given. Debit side discount, credit side discount. Discount allowed 700, discount received 600. Debit side will write, P&L account, credit side only will write, because it is income and this is expenses. Next, bank charges, anyway it is expenses, P&L account debit side will write. Next, debtors, creditors, both together it is given. 90,000 is debtors asset, 50,000 is creditors liability. Salaries 13,600, this is also indirect expenses, P&L account debit side. Manufacturing wages, this is direct expenses, it comes in the trading account debit side. Carriage inwards, direct expenses, trading account debit side. Carriage outwards, carriage outwards, indirect expenses, so P&L account debit side. Bad debts provision, for bad debts is the loss we know. For bearing this loss, they have kept a provision of 1050, this is the provision they kept. I will explain this with adjustment later, now just remember it is on the credit side. Credit side means if nothing is given in the adjustments, we will write it credit side of P&L account. Provision we have provided. Next, rent rates and taxes, expenses, debit side of P&L account, indirect expenses. Advertising is also indirect expenses. Cash in hand, balance sheet asset. Now coming to the adjustments, all adjustments appears twice. First one is closing stock, trading account credit side, balance sheet asset. Next, depreciation on plant, P&L account debit side because it is a loss. And second time, balance sheet deduct from the plant in the asset side. Next, bad debts provision to be adjusted 1000 rupees. Here it is already bad debts provision is 1050 is given. Now they are saying that adjust it to 1000. Whatever is given in the adjustment, that is loss. 1050 we have provided. Out of that loss is 1000. Loss means debit, credit side. So the difference will be writing on the credit side, because credit side amount is more, debit side amount is less. Debit side, why we are saying debit side, it is a loss. So debit side is less, credit side is more. Credit, debit. That will take it in the difference on the credit side. If suppose this is 900 only, provision is 900 but loss is 1000, loss means debit side is more, then the difference 100 rupees we would have taken on the debit side. But anyway credit side is more, we are going to take it on the credit side. So 1000 one time we are taking into the P&L account, another time balance sheet deduct from the debtors. Next, interest on capital 10%. You know that interest on capital P&L account debit side, because it is indirect expenses, and balance sheet we have to add to the capital. Next, 5% profit to be carried to reserve fund. Reserve fund we wanted to provide 5%. When you get net profit, out of that 5% take it out. One time it comes in the P&L account debit side, second time balance sheet liability. Clear? Now first we will put the tick mark adjustments where we have depreciation and plant. Where is the plant? Plant is here. We have an adjustment. Next, bad debts provision will be on debtors. Where is the debtors? It is here. There is an adjustment for debtors. Interest on capital, capital is here. Capital also there is an adjustment. Next, anyway, this is, we'll do it end of the after P&L account. Remember this, and we have to provide the reserve. Now we can start the problem. So first, opening stock. Where is the opening stock? It is here, 60,000. We'll write first to opening stock. Opening stock is 60,000. Then purchases, that is purchase returns also, we'll write it in the inner column. Purchases 1,20,000 minus purchase returns. Purchase returns are 1,500. We'll see this later calculation. Next, sales, buy sales. Sales are here 3,54,000 minus sales returns. Sales returns are 2,000, opposite 2,000. Next, closing stock we have to write. It's always in the adjustments by closing stock. How much it is? 70,000. Apart these four, we have to search for the direct expenses. What are the direct expenses? Opening stock, manufacturing wages. This is direct expenses. So we'll take manufacturing wages. To manufacturing wages, it is 20,000. Next, carriage inwards. This is also direct expenses. To carriage inwards. IW means inwards. Carriage inwards are 1,500. Next, anything else? That's all. We have taken everything. Now first we'll close this. We'll do it directly. Okay, first we'll also work out the P&L account. P&L account related, what are the transactions? Sales, or otherwise we'll first close this trading account. For closing trading account, 1,20,000 minus 1,500, it is 1,18,500. Anyway, check it. 1,20,000 minus 1,500, 1,18,500. And here 3,54,000 means 3,52,000. If we total up, 4,22,000. 4,22,000 minus all these amounts. 4,22,000 minus 60,000 plus 20,000, 80,000 minus 1,18,500 minus 1,500 comes to 2,22,000. So I'll use another pen. 2,22,000 is the gross profit. This is GP. GP will transfer it to the credit side by GP. P&L account will start with gross profit. Now after this, we'll see the P&L account related transactions. What else we can write in P&L account? Only indirect expenses and any income. Sales, purchases, returns, opening stock, discount. Discount debit side 700. And credit side 1,600. Then after that, bank charges 150. Indirect expenses. Next, salary is 13,600. If any adjustments are there, we could have written some tick marks so that we won't forget to take that adjustment. So anyway, no adjustments, manufacturing, carriage outwards 2400. Carriage outwards. Next, bad debts provision. Bad debts provision, just now I told you, this is credit side, they have provided 1050. Loss 1000 rupees. Provision is more, loss is less. Out of this provision 1050, 1000 we are using. After using it, how much is left? 1050 minus 1000, 50 rupees. 50 rupees, we'll keep it as it is on the credit side. So what do we say? Bad debts provision. Bad debts provision will say 1050 minus 1000. It is 50 rupees. Okay. Bad debts is over. Rent, rates and taxes 20,000. Advertising 4,000. Rent, rates and taxes. Advertising 4,000. And coming to the adjustments, depreciation on plant 12%. So we'll say depreciation on plant 12,000. Plant is here 1,60,000. 1,60,000 into 12%. 1,60,000 into 12% comes to 19,200. Next, bad debts provision, this is already over. Interest on capital 10%. Capital is 1 lakh. 1 lakh into 10% comes to 10,000. Interest on capital. Interest on capital is here, 10% is 10,000. Interest on capital. Next, to 5% of profit to be transferred to the reserve fund. So for that, first we need to calculate the profit. Out of this, we'll calculate the profit. So 2,22,000 plus 1,650. It is 2,23,650. 2,23,650. First we'll take out profit, then we'll calculate the reserve fund. 2,23,650. This minus all these amounts, minus 700, minus 150, minus 13,600, minus 2,400, means 22,400, minus 4,000, 14,000 will take directly, 14,000, minus 19,200. So it comes to 1,53,600. Okay, 1,53,600. Roughly I am writing here 1,53,600. On this we have to give 5%. You can show it in the working notes also, this one, like this, working notes, calculation of reserve fund. So amount you can write. So on this 5%, 1,53,600 into 5%, 7,680. So like this, working notes, first point. So this we are going to write reserve fund 7,680. To get the net profit, even this one also we have to deduct na? To get the net profit. Actual net profit is this. We are providing 7,680 here. It means net profit is decreasing. So to get the net profit, 1,53,600 minus 7,680 comes to 1,45,920. 1,45,920. So this net profit, how do you got? 1,53,600 minus 7,680. So up to here, if you are clear, then we can go ahead. So you can take a screenshot or note down. Now what we'll do, first we'll rub everything. Let me write this net profit here, 1,45,920. 1,45,920. This is the amount needed, and also reserve fund 7680. Whatever is needed, we'll write it over here. Reserve fund, how much you got? 7680. And what else we have done calculations? Depreciation and plant 19,200. Interest on capital 10,000, we can calculate it. That's all. Now I can rub this. आरती इसमें ब्लैक कलर इंक डालना, डाल के दे दो आरती, ब्लैक कलर इंक डाल के देना. So now we are working the balance sheet. So for balance sheet, what else we need? Let me just take an ink. It is over already. So this is, keep quiet, no problem. Close it, na? So coming to the balance sheet, we need more ink for this balance sheet. So balance sheet, first we'll see all the assets and liabilities. First we'll take cash in hand. Cash in hand is 13,800. This is over. Next, all the assets and liabilities directly we'll take. First one is capital. Capital is here 1 lakh. So now the capital is here 1 lakh, and what we can do to the capital, first we'll add the net profit 1,45,920. And interest on capital is there, yes, interest on capital, that also will add. Interest on capital is 10%, 10% means 10,000. Total we'll do later. Capital is over. Plant and machinery. Plant and machinery, there is a depreciation, so I'll write the amount in the inner column, 1,60,000 minus depreciation, and depreciation for plant and machinery is 19,200. So we'll see later calculation. Sales, purchases, returns, opening stock, discount, bank charges. Now debtors, creditors. Debtors, there is an adjustment, so I'll write the amount in the inner column. Debtors is 90,000. Bad debts provision is 1,000, this said, related to debtors. This is loss. This only we are going to deduct. We will not touch this 1,050. This comes only one time, that we have taken already into the P&L account. Now 1,000 rupees only the loss, that will deduct it. Minus, what is this? Bad debts provision. Bad debts provision, BDP. How much? 1,000 rupees. 89,000. Debtors are over. Now creditors, it will be on the credit side. creditors 50,000, salaries, manufacturing wages, carriage inwards, outward, this everything is over. Yeah, everything is over. Now coming to the adjustments, last one is closing stock. It will be always 2 times. Trading account credit side, in the balance sheet asset side. Closing stock, it is 70,000. Next, depreciation and plant already taken. Okay, this is over already. And bad debts for provision 1,000 rupees also we have taken. Next, interest on capital 10%, this is also taken. 5% reserve fund, debit side, and also balance sheet liability. Here we will take reserve fund, $7,680. Already we have calculated, so 7,680. Anything else to write? Capital, plant and machinery is over. Opening stock, debtors, creditors are over, and our cash in hand is also taken. That's it. Now we'll close this. First we'll do the internal calculations. 1 lakh plus 1 lakh 45 means 2 lakh 45. 2 lakh 45 920 plus 10,000 means 2 lakh 55,000. 2 lakh 55 920. 2 lakh 55,000 920 plus 50,000 plus 7,000 means 57,680. 57,680. It comes to 3,13,600. 3,13,600. It must be same on the credit asset side also. 13,800 plus, so we'll do the internal calculations first. 1,60,000 minus 1,60,000 minus 19,200. It is 1,40,800. This plus the rest of the items like 13,800 plus 89,000 plus 70,000. 3,13,600. So that's all, problem got tallied. Now here we can show working notes. So working notes, what we can do, first one is here, working notes, calculation of depreciation on plant and machinery. Plant and machinery cost is 1,60,000 into 5%, 12%, sorry. 12% comes to 19,200. Working notes first point, and also working notes second point, what we can take, interest on capital. Calculation of interest on capital. Capital is 1 lakh. 1 lakh into 10%. It is 10,000. And in the same way, reserve fund calculation also you can show. In the previous slide I have taken, same calculation, show it in the third one also. That's it, 3 if you show it, enough. So this is about the rest of the problem. You can just take a screenshot or note down. Problem is simple, only the thing is we have to remember the adjustments. So how to do the adjustments, this and trial balance, that's all, simple problem. You can just stay connected with me. The same problem if possible, without looking at the solution, understand it, then work out and see. Also take out your textbook and work out some more problems. So that would be much easier for you to understand. So please go to the description box or playlist. There are many subjects, many chapters already I have taught, and work out and see and do help to someone by referring this channel. So stay connected and have a bright future. Good luck.